Good morning, good afternoon, good evening, everyone, and welcome back to the Breakfast Show. It's going to be a short week this week. It's going to be a quiet week as well, hopefully, but quiet but green. That's what we want, quiet but green. We have some newsworthy things to discuss. We have some Openai news, Oracle, Nvidia, some Fintech news as well. So quiet week, but we're starting off with a couple of good news and good topics out there. First of all, good morning to everyone in the chat. Thank you for joining. Chiefy, you said here, rule a pug. Well, here it is. Here it is, the pug. Miguel, there is a Goku actually in the intro. He is there. There's something stuck in my throat. So, the news topics of the day is we've got Openai compute margin that gets better. We've got some analyst notes on PayPal, Shift4, Oracle. We've got some news on Nvidia and China. And then a little bit more on this rotation away from AI towards financials and healthcare. So we have a lot to discuss. If you're interested, of course you are. This is basically the heat map right now, pre-market. Got a lot of green. Fintechs, most of them are green. Neoclouds, all of them are green pre-market. Chip names, all of them are green as well. Then if you go look at the big tech companies, all of them are green, with Oracle up 3% right now. Apple is the one that's down 0.1%. And then looking at the general list here, UnitedHealth is the one that's down 1.1%. All the rest is green at the moment. So far, so good. Pre-market, that is. Then, this was the news that came out, I think, what was it? Yesterday. So during the weekend, we've got this news talking about Openai compute margin doubling over nearly 2 years. And it was actually up 52% at the end of 2024. So the margin came in at 70%, up from 52% at the end of 2024, and doubled the rate in January of last year. Of course, the better the margin, the better the headlines will be when it comes to the cash burn rate for Openai. Now, they did say here, consumers have spent more than $3 billion on ChatGPT mobile app in the roughly 31 months since it was launched, according to the findings last week from mobile analytics and intelligence platform app figures. The bulk of that figure, $2.5 billion, was spent just this year, with spending up 408% since last year, which is insane. They also noted that the speed with which ChatGPT mobile app arrived at the $3 billion milestone in mobile consumer spending was faster than TikTok and major streaming apps. Payment CEO wrote last week, close to 900 million people submit queries to ChatGPT each week, driving 2.5 billion queries a day. That's happened over the last 3 years, while Google took 13 years to achieve such volume. Well, obviously, 20 years ago, 15 years ago, there were fewer people online, so it makes sense. Payments intelligence data shows that more than half of the US population uses ChatGPT and other chatbots for the various pillars of the connected economy. The activities guiding the way people shop, pay, live, work, eat, stay well, have fun, travel, communicate, and bank. Of course, it's great to see that, okay, there are plenty of people using ChatGPT. Most of them still use it for free at the moment. Now, we've talked about it before, talking about the fact that, okay, it's great to see monthly active users go up. There is, of course, a percent of those monthly active users that are paying users, are power users. But for ChatGPT to really become a variable business, they need a real business, because it's only here subscription. That's why, in my opinion, they want to go into hardware. Once you have hardware tech, you can then, of course, attach the subscription to it. First of all, you're making some money, very low margin on the hardware, and then you're making the rest on the software side of things. But we'll see what the hardware product is going to be. A lot of the competitors, of course, they have phones, they have operating systems, AR glasses, VR glasses. We'll see what Openai comes up with. But okay, this is already a good, let's say, headline. The next one comes from Wells Fargo, talking about Oracle. So Wells Fargo reiterates overweight on Oracle with a $280 price target, saying the pullback has been driven by AI-related pessimism and concerns around Oracle's OpenAI exposure. The market is underpricing Oracle's AI growth potential and improving sentiment tied to a possible TikTok US deal. Of course, that came out late last week on Friday. Oracle popped, and well, actually everything popped on Friday, other than I believe Uber was down, Meta was down, I think Tesla was down a little bit as well. But yeah, the TikTok US deal could, of course, change the sentiment around Oracle, but it has a material financial impact on the business, which is a good thing, because it can support their huge roadmap in this whole AI data center build out. Now, where is Oracle actually today? 192 was the closing price on Friday. Okay, so they see quite a lot of upside for Oracle. So some sentiment here change for Oracle, which is funny because sentiment can change just like that. Then we've also had an Nvidia report that came out. Nvidia told Chinese customers it aims to start shipping H200 to China before Lunar New Year, which is mid-February, using existing stock. Initial deliveries are seen at 5 to 10K modules, about 40 to 80,000 chips, but it all depends on Beijing's approval. So now we are in a situation where, okay, US approves, let's see if Beijing approves. And if not, then I guess all of these Chinese companies will have to set up companies elsewhere and buy from there, which is probably what they've already been doing for quite a while. And Nvidia on the news is up 1.7% at the moment. Micron is up 3.6% pre-market. Pluribus, yeah, some of you have started watching this. I'm up to date with the episodes. It's good, but yeah, it's probably this, right? It is good, but first of all, I do think it is overhyped. It's a good show, but it's not like, oh, the best thing on TV at the moment. Are you ready to pump? I mean, I am always ready to see PayPal be up a little bit. But will we pump? Probably not. If we look at we have a Mizuho. So Dan Dolev came out with a new analyst note on PayPal, which, not surprising, he's cutting his price target a little bit. for PayPal. The reasons for it are as follows. So Mizuho reiterates outperform, trims the price target to $75. So it's still 25% upside from here, which I think if you can have 25% upside in a year, it's pretty good. Although those that are down or hold options like myself, 25% will not really, $75 will not really save me here in this case. But what does he say? What did he say? He said branded checkout growth, or he expects branded checkout growth to be lower, around 1% in Q4. That's down from the 4% before. Pay with Venmo forecast cut to 40% growth year over year, down from 45%. Still very good 40%, but being down by 45%, not the greatest, but okay. Transaction margin dollars growth reduced to just 2%. EPS growth for 2026 revised to just growing 4%. That's down from the 7%. And OPEX growth for 2026 now modeled at around 3%. That was around 1%. Now the thing here is that I'm not surprised, because all of these comments, especially, I mean, not all, but branded checkout, transaction margin dollars, EPS, and OPEX were all touched on the last time Jamie Miller spoke, and the stock went down. That's the reason why the stock went down. Plus, of course, the consumer spending still being lower than what they wanted it to be. So I'm not that, let's say, worried about what he's saying right here. I think he's going into 2026, putting his estimates quite low, putting the bar quite low, and then we'll see what happens after the first, it's probably going to be the start of February, Q4 earnings report, plus the guidance for 2026, and then he can adjust accordingly. Of course, it's not the best, these types of growth rates. It's not the best, but I'm not that surprised, which is probably why the stock pre-market hasn't really moved that much. Then, did I get laser eye or wear contacts? I do not. No, I do not. Why is that? Do I look like someone that does? I do have glasses, but it's just like for driving at night when it rains or something. Then like the red and the green stuff, it's not the greatest. Or if I really have to be on the looking at screens for a whole day, then sometimes I do like to wear it, so I don't have to be like this the whole time. So yeah, sometimes I do, but most of the times I don't. Then for Shift 4, also price target is cut by a little bit, but still higher than where we're at right now. The upside here is 40% for Shift 4. So what did you see here? Q4 volume estimates lowered to $58 billion. Q4 revenue trimmed to $614 million, and adjusted EBITDA to $305 million. 2026 growth is now modeled in the high teens versus 23% previously, and adjusted revenue growth cut to high 20s%. The risk watch here is macro uncertainty, is the key driver behind reduced long-term growth assumptions. Now, again, I go with the same assumption conclusion here, is that he wants to exit 2025, lowering the bar, especially with these types of companies where, well, PayPal is still going through a lot of changes. Shift 4 just done the big acquisition. And so going into 2026, there is still the uncertainty with spending. So, okay, I understand it, but the upside still here is quite good. Now, Shift 4 did announce actually something else this morning. They are launching where is it? Here it is. So Shift 4 launches global stablecoin settlement platform for faster merchant payments. So they unveil global stablecoin settlement platform. Merchants will gain faster access to funds, which will be available 24/7. This eliminates the reliance on traditional banking hours. They support settlements in USDC, USDT, Euro, whatever this is, and DAI. Merchants can select multiple blockchain networks. Supported networks include Ethereum, Solana, Stellar, and Polygon. Platform targets hundreds of thousands of global merchants, enhances liquidity and cash flow flexibility. Shift4 addresses growing demand for modern crypto-based payments. Initiative aligns with expansion of global commerce ecosystem. E-commerce ecosystem. Leadership highlights stablecoins' role in always on a global economy, which again is something that we've seen across the board. Shift4, SoFi, PayPal, and then all the others are probably going to do the same thing. You can play with margins. You will make sure that people can move money faster. So it's a good thing. It's a good thing. Right now, if we look at Shift4 stock, it is up 1.4%. It is still very, very cheap in my opinion. Yes, the Global Blue acquisition still maybe raises some questions on the return on investment, but if you look at their track record of M&As, it has worked out very, very well. And then we still have that one metric that we can judge them on, right? The exit of, exiting 2027 with what was it? Free cash flow of $1 billion or something, adjusted free cash flow, exit rate. If they can meet it, great. If they cannot, then you can judge them on that. I have a couple of friends that did it as well. They do not regret that decision, because previously they had to wear glasses all the time. Of course, their number was much, much higher than mine. They have to wear contact lenses. So every time we went on vacation, pool, beach, etc., sometimes they forgot. So you go to sleep with contact lenses. It's not the greatest thing to wake up with. Yeah, lots of positives of doing that surgery. Rob, you bought some of our own Mistress Applied Digital. Where is it now? Applied Digital. 27.8. My whereabouts is on CoreWeave, Nebius, and Iron right now. Cannot go back to everything. Cannot go back to everything. Nike, they reported last week for the quarter, I guess. We talked about it a little bit. The stock went down 10% afterwards. It's purely because of guidance, the tariff impact, and then the guidance as well. So I said it before, it is again a turnaround story, and one that will take a long time, because you are again dealing here with shoes, apparel. It takes time to turn it around, and there are way more competitors right now. Customers, I believe, is still the same. Yes, Nike still has the Nike brand, though it's known worldwide, but it's a turnaround that will take time. And then yes, some things were out of their control, such as the tariff impact. Crystal Palace. Well, it was a good weekend all in all, I think, in the Premier League. Let's see if we've got some other breaking news. We have again Paramount coming out with a better offer for Netflix. So this story is not over. Not over at all. Paramount Skydance says it's updated the $30 share all-cash bid for Warner Brothers by adding a $40.4 billion personal guarantee from Larry Ellison and tightening trust-related commitments during the deal window. It also bumped the regulatory reverse break fee to $5.8 billion to match the Netflix Warner Brothers terms, added more operating flexibility, including refinancing, and extended the tender offer to January 21st. 2026. Well, they are desperate. They are desperate to get these Warner Brother assets. I mean, the breakup fee alone would destroy Paramount right now, because they just don't have the business. The business doesn't generate that much cash flow. But okay, if you add Larry Ellison, if you add Saudi Arabia, if you add Qatar, you add a lot of other partners here, then I guess you have unlimited amount of money. But it is a funny story again, especially after Warner Brothers basically came out last week and said to their shareholders to accept the Netflix deal. It's the best deal out there. So yeah. What did you buy your family members? Don't worry, I'm not your family member. What did I buy my family members? Well, recently, nothing. But, well, no, recently, a tablet, a phone for my parents. My dad a tablet, my mom a phone. And then for the rest, well, not for the rest, for the rest, for my brother, because it was his birthday not that long ago. We are going on a trip with the siblings. When, I don't know. He can decide. He decides everything, and me and my sister basically pay for it. But what did you guys buy more recently? Yeah, Warner Brothers is and it's like it came out of nowhere, right? It came out of nowhere. Suddenly, it gets all the attention, which is strange, right? Because Netflix came out with the offer, and then suddenly Paramount reacted. Would have been interesting to see if Paramount was the first one to offer something, and then Netflix come with another bid. But it seems like Paramount waited to see what Netflix is going to offer, and then poof, come out with their own ones. Yeah, I mean, other than stocks, what did you all PayPal shares for your dad? I mean, you either love him very much or not. Do I drive a Lamborghini? No, I don't drive a Lamborghini. I do drive a Lamborghini in Fortnite, but that doesn't count. When will I buy a Tesla? I mean, if they solve for autonomy around the world, then I don't really need to buy a Tesla. But when would I need to buy a Tesla? When I will feel the need to actually own a car. I don't need to own a car right now, so don't need those extra expenses. And if I need to take the car, I have enough family members and friends that would lend me their car for the weekend or whatnot if I need a car. But yes, if I do have like excess money, then this is probably the one that I would buy first with some excess money. The Audi R8. Love that car. Love it. Talking about autonomous vehicles, Uber, we have some exciting news here for the start of 2026. So they're teaming up with Baidu, Apollo Go, to pilot autonomous vehicles in London. Testing is expected to start in the first half of 2026 under the UK's Frontier plan to bring trials for self-driving vehicles. We're excited to accelerate Britain's leadership in the future of mobility, bring another safe and reliable travel option to Londoners next year. So again, Uber is not standing still here when it comes to launching autonomous vehicles around the world. And in this case, it is with Baidu in the UK. I think 2026, the topic in 2026 is definitely going to be humanoid robot autonomous vehicles. I think that's the topic for 2026, and Uber on that news is now up 1.3% pre-market, so just above $80 for now. We'll see when the market opens. AV-Ride is in the US, so you have AV-Ride, you have WeRide, you have Wave, but Wave is also in the UK. So AV-Ride is Nebius, so that's I think for Dallas. WeRide I think is in the UAE. Yes, and Lyft is also in this deal. I mean, Lyft also announced this as well, so also great news for Lyft. Let's see where the stock is at right now. I think it was 20 last time I checked. Okay, 19.6, close enough. I did apply. I applied twice and I got zero tickets. But you're asking for the general stuff. No, because honestly, I looked at the prices and I'm like, screw this thing. I'm not going to fly all the way to the US to then also pay God knows how much for tickets. I know that some tickets, the prices got reduced, but okay, thank you. What is going to be probably the worst game out there, and I'm going to sit behind the toilet. And $60 is not worth paying that much. Plus, I mean, the whole travel expense is going to be quite enough. So probably not, which is going to be a pain in the butt because there are going to be probably some good games in the middle of the night or something like that. But yeah, we'll see. So for now, no, I did apply like for the pre-sale, the visa thing, but I got literally 0.000 tickets. How do I feel about Uber given the earnings contraction next year? Well, actually, I checked earlier today, and Wall Street does expect operating income for Uber to grow by 40% next year because of all the changes in insurance costs. So insurance cost was a huge headwind for the company. In some states, the insurance, the minimum amount has been lowered significantly. And so that's going to help Uber quite a lot because a big part of the prices are affected by that. So you can see, we can either have lower pricing for Uber rides or drivers will get paid more because of this. But yeah, next year I do expect a lot of cost savings thanks to that for Uber. As for the earnings contraction next year, let's actually see what's expected for next year for Uber. Because again, the lower the insurance, the better it will be for Uber. And so if autonomous vehicles are the thing and it's going to be a global phenomenon, then insurance costs should come down significantly, because if the data shows that an autonomous vehicle is much safer than a human driver, then you should see the cost of insurance come down significantly. Let's see. I was looking at some old data. Okay. So next year EPS is indeed expected to come down a little bit. But what's the reason for that? Let's see. Because operating profit is expected to be up 44.8%. Revenue is expected to be up 15.8%. But yeah, net income is expected to be down 36% for Uber. And as for free cash flow, let's see. Free cash flow next year is still expected to grow 11.5%. Still very important to me. But what was the reason for earnings coming down next year for Uber? Remind me in the comments, please. Actually, maybe we can search for it. Let's see. And then we'll go and have a quick listen to some analyst talk here. Let's. So you see, they already talked about this. So Uber's 3-year CAGR framework targets mid to high teens gross booking growth and high 30s to 40% EBITDA growth. The company is committed to profitability growing faster than its top line for years to come, though margin expansion may moderate due to strategic reinvestment in low duration growth opportunities. Specifically, hundreds of millions of dollars in insurance savings will be reinvested in the US market in 2026 to lower pricing and drive trip inflection. Operationally, Uber plans to have autonomous vehicles available for order on its platform in over 10 cities by the end of 2026. Yeah, okay, so it was basically because of this. Okay, so it's not something changed from the business. It's like there are many companies actually that this year saw this type of positive effect this year, which is why next year you're going to suddenly see things worsen. But as you've just seen, operating profit, free cash flow, all of that is still expected to increase next year for Uber, which is a good thing. All right.
All right, we're going to start with this Mag 7 chart, right? So take a look at this chart. I want to get your take on it. Something I think is interesting is that this part right here, we haven't seen the Mag 7 hit a new high since all the way back in October. What are the charts telling us about the path forward?
That's right. I think it's telling us that we're about to have that happen. This is what we call a cup and handle pattern. It's a bullish formation. What you do is you have a breakout, you have a measure move, and that would get us there. Now, of course, it all matters what's happening underneath the surface. So we know some stocks are doing very well, Tesla, so forth and so on. But what's interesting about the Mag 7 is that we haven't had the stocks move in unison for quite some time. So 3 of them that I'm looking at is Amazon, Meta, and Microsoft. Look at those charts that kind of went back and forth recently. But if that happens, this is what we expect. Okay. We've seen breakouts before like this, right? And I expect the same thing to happen again now.
Is there one stock within the Mag 7 that you need to see really outperform the broader market in order to push this Mag 7 ETF and just that group of stocks higher in the new year?
Other than the last 3 we just talked about, of course, Nvidia. Which has been flat for a few weeks to months as well.
All right, we're going to move on to your next chart right now. Clear that out for us, Frank.
I love it when the technical analysis on here is so complex, right? So you see stock like this, arrow to the upside, and why is that? Because we've seen it before. Arrow sideways, arrow upside, stocks go up. Ta-da! Actually, if I don't even have to clap myself because Thank you. I appreciate all of you. My course on technical analysis will go live on January 32nd.
Take a look at the next chart. I believe it's the XLV we're looking at right here, right? So this is the healthcare ETF. A lot of talk about healthcare recently. It's recently been led by drug makers. Is that a good thing or a bad thing? I know they had some negotiations with the White House about prices and a few other things. Is that positive, and is that going to lead to a positive trend for this ETF?
Well, it has been. PJP ETF for pharmaceuticals is up 30% in 4 months. XLV up 20% in 4 months, which is the biggest 4-month move in its history. If you recall, I was here in World Wide Exchange back in August talking about a mean reverting move. It didn't happen until August, but hey, now we are back here. So I think eventually you get a breakout. I'd like to see more consolidation first, kind of like what we were talking about with the last chart, maybe a higher low here, have more digestum come up, but I think eventually you see a breakout.
I want to point out for the audience, though, the last chart was a year-to-date chart, I believe, but it was going by months. This one's going by years. So this period of time's a lot longer than the other period of time we were looking at. The fact that you're seeing this move right here, what does that say to you about this trade?
Well, it's had a great comeback. And of course,
before I let the magician continue here with his technical analysis, he's talking about this thing right here, the select sector SPDR Trust State Street Healthcare Select. So this is basically what has happened. Year to date, it's now up 14%, but you can see there was a period where it was down to flat. And then, well, since the end of September, it's up 14.7%. These are its holdings. The largest one is Eli Lilly, 15.2%. Then Johnson & Johnson, AbbVie, UnitedHealth, Merck, Abbott, Thermo Fisher, Intuitive Surgical, Amgen, and then all the rest right here. That's, I mean, Eli Lilly been 15.2%, and then the second is just 8.9%. Quite a lot of exposure to Eli Lilly.
No one wanted to go in healthcare for the longest time. We have a very sharp move to the upside now. Now everyone loves it, so maybe we need more of a digestive phase before we see the breakout.
All right, as we do our third chart of this Frank and Frank segment, dealer's choice. What chart do you want to look at next?
Here we go, XLF financials. And as we can tell here, another period here where we've seen a potential breakout to new highs. And again, we're going all the way back to 2011.
Yeah, we're going way back on this
way
one.
Back.
Way back.
But what do we see? A pattern that continues to repeat. A long consolidation breakout, new all-time highs. Most important thing, follow through. Follow through. We're talking about follow through for years. So if that's going to be repeated, then this could just be the beginning stages of that.
Okay, could be the beginning stages. I want to ask you, since we're going all the way back, how much of this upside movement is led by the idea of rate cuts? Because certainly here, one factor in this upside move on this end of the chart has been the Fed cutting rates.
Yes, I am watching tennis, although there is nothing to watch right now because the season is over, but the season starts pretty soon yet again. Now, again, here is talking about XLF. XLF is basically this. 11.6% still in Berkshire Hathaway, 11.1% in JP Morgan, 7.6% Visa, then MasterCard, then Bank of America, Wells Fargo, Goldman, Morgan Stanley, Citi, American Express. Do we see here any of... We see Robinhood at 1.2%, but that's about it. All of the rest are, of course, your big names out there. So that's XLF for you, the one that he's talking about.
I think that's a big part of it, but if you look back to what's been going on here, there's been, rates moving lower and higher, so I think it's a big part of it, but, you have financials, second biggest sector in the whole S&P 500, so eventually need that to be part of the leadership role going forward.
All right, so again, similar questions to the Mag 7. Is there one stock in this group that we need to see do a breakout, outperform the market, outperform the XLF, to continue to push the financials higher in the new year?
Yes, JP Morgan, which is the second biggest stock within the XLF, and obviously right there, and it looks very similar to this. Now, if you look at the daily chart, that's about to break out as well.
All right. We're showing the JP Morgan chart right here. So you're seeing a similar pattern to the ETF here, but you're saying this, if this shows leadership, it's a very bullish sign for the group.
Exactly. So we can see it's about to break.
Well, we've just seen that the number one is Berkshire, and well, that has not been performing well, if I remember correctly. So where is this one? Berkshire Hathaway. It's B, right? Yeah. So this is basically Berkshire stock. If we go, let's put the weekly. So this is a stock that has been trading sideways since February, although we're not that far away from the November top in 2024. On the weekly, it is here right now on the 50-day moving average. Yeah, I think so. B is this one. A is the one with the huge pricing. All right, let's have a look at a couple of names here right now. We have Oracle that's up 2.6%, Tesla 1.4%, Google 0.9%, Amazon 0.7%, Meta 0.5%. Meta is also in a nice situation here. Netflix 0.2%. Still expect the stock to stay in this range until this whole Warner Brothers situation gets resolved. Microsoft has had a nice rebound again on that 200-day moving average. As for the fintech names, Federer is the GOAT. Discutable. Netflix cancelled Breakpoint. Well, if we're being honest, it was not like Drive to Survive. But then again, that's because the characters that you follow are really not that interesting. All right, Robinhood is up 2%, Webull is up 1%, but let's actually make this better. So Chime 1.6, SoFi 1.5, Shift4 1.1. Let's see if we can finally have a little green candle here for Shift4. Pagaya is up 1% also on that 200-day moving average. Affirm is up 1%, same for Webull. Let's say Zeta is also up 1%. Klarna is up 0.6, same for Block, same for PayPal. DLocal is up, let's call it also 0.6%. Nu is, Nu has also seen a nice pullback here. Okay, nice, up 0.5. Dave is up 0.3. Amex 0.2, and then Visa, MasterCard basically down to flat. As for the neoclouds, we have Iron, that's up 6%. Something we missed? Did something happen with Irene? Let's see. If yes, then I missed it, but I don't. Because they're of course not providing us with any updates recently. Let's see. Nothing. I don't see any posts on Iron. So okay, I guess we'll take a 6% jump in pre-market without any news. It's probably going to be flat when the market opens, the usual. Nebius is up close to 4%, Cypher is up 3.8%, Applied Digital 3.7%, Core Scientific 3%, same with CoreWeave. CoreWeave had one heck of a day on Friday, up 22%. Hut 8 is up 2.8%, and White Fiber is up 1% right now. Yeah, I mean, I like the... of course, the F1 and the Golf Swing. Golf Swing? The one with golf. I love it. That's a very, very good one. The NFL ones are hit and miss. Hit and miss. Bitcoin is up a lot today, so that's why Iron is up quite a lot. I mean, when will we stop having... up a lot? No, but I guess, okay, since Friday... it's up a little bit. I mean, the disconnect will happen once Iron will show that AI cloud revenue is becoming much, much bigger, and not just 1 million or 2 million revenue or something like that. I guess that's when we're going to see the disconnect right here. But again, I'll take a 6% pre-market. Micron is up another 3.68%. And I know some people say, oh, do you regret taking profits? No, I secured my profits. And now I enjoy the continued ride on the way up with the rest of the position. Marvell is up also 2.3%. Same with AMD. Nvidia is up 1.8%, trying to make its way back here, $185. Intel is up 1.8%, TSM 1.7%, Lam 1.6%, Broadcom 1.5%, Applied Materials 1.5%, same for CLAC. ASML is up 0.6%, and the same goes here for Qualcomm. A lot of these names, as you can see, went down to their moving averages, and then we have seen a little rebound. Last chance, you basketball one. Did I watch? I don't think I did. Don't think I did. All right. Moving on to another AI reset talk, which I think is going to happen. Maybe I mean, it already happened, but I think we can see a
look at the bond market,
rotation.
specifically the 2-year yield. Surprised we're not seeing a bigger reaction, maybe yields moving to the upside. As Hammock, a voting member, says she doesn't even see the need to cut.
Yeah, I think at this stage, the market has priced in, probably the fact that in January, we're not going to see another cut. So the Fed is on hold. And so I think it's really going to be data dependent in terms of whether we'll see further downside on the labor market front, and so I think that's going to be one of the key inputs into Fed decision making.
All right, turning back to the markets right now, we're just talking about a bit of a rebound in tech. We're going to be talking more about that, the technical take coming up in just a minute. But when you're looking at the tech trade right now, going into the end of the year, we've seen recent strength. But could that change with the idea of profit taking and maybe some people trying to lock in some of the big gains that we've seen in a number of these AI-focused names?
Yeah, I think we had a great day on Friday, but I think it's too much to extrapolate that too much into the future. We think going into 2026, there's continued to be scrutiny on the capex side and whether companies can monetize the spending that they have. So it's too much to say, and I think it's as tax season comes in, I think companies or investors might take some profits going into the year.
All right. So you say you have.
Before he continues, just an FYI, the probabilities of a rate cut in January have dropped to just below 20%. And the chances of a government shutdown at the end of January have also dropped to around 30%. Last week, we were actually closer to 40, 36, 37% or so. So chances of a government shutdown for now on Kalshi here have dropped a little bit. So we're now at 30% chance for government shutdown. Then, since you've asked so nicely, and this is the 20th day in a row, apparently I have to look at this POW, Prisoner of War, ETF. POW ETF from Vista Shares. Okay. Let's see. Okay, I don't see anything here. Let's see here what we have in a POW Vista Share ETF. Holders or holding? I want holdings. I see nothing, Jon Snow. You know nothing. I know. So Vista Shares. Can I see what you hold or not? On this website. Here. Okay. Holdings and characteristics. What is this? The only company I know is Siemens. It's the only one I know. So it's electrification super cycle ETF. Okay. Now we have to go and look at each and every one of... how many screens I have? 3 screens. So good. So good. Used to have 1 screen, then 2 screens. Now I have 3 screens. Wonderful stuff. Let's just take a random one. Maybe Powell Industries. What a name. Powell Industries. This is Jerome Powell's side job. So they design, develop, manufacture, sell, and service custom-engineered equipment and systems for the distribution, control, and monitoring of electrical energy. Well, this stock is up 10x over the past 5 years. Wow. Almost 10x over the past 3 years, actually. Sheesh. Not too bad. And margin-wise, also not that crazy, right? For this type of company. Free cash flow margin 14%, net 16.4%. Pas mal. PE is a bit on the higher side, I guess, for this type of company in this sector, especially with EPS expected to drop. Maybe that's why Powell is... So revenue is still expected to grow. But EPS flat and then 14% hit next year. Okay, maybe also operating profit so also expected to drop. So interesting stuff. Yeah, it's not really my sector, but okay, maybe worth digging into it more when I have time.
Some valuation concerns on the hardware side. It was actually a note out over the weekend from Bernstein saying that Nvidia is actually the cheapest it's been in quite some time. So you're not, is that the hardware you're talking about, chips, or is there some other hardware that you're looking at? Is it data centers? Is it some other part of this AI trade?
Yeah, we think hardware, I think it's the entire complex, whether it's chips, whether it's the data centers. So if we think about where the biggest value is, in our opinion, it's more companies that ultimately have the ability to monetize through either enterprise use cases or consumer use cases. So, if you look at the last 3 years in terms of what's done well with the AI trade, it's been the hardware names, the chips, the Nvidias of the world. So, yes, it's true that some of the excitement and some of the sentiment has come off since October. But we would say that there's potentially still more downside if we do see some of the CapEx plans being revisited potentially in 2026.
All right. So right now, your key conviction positions are small caps, healthcare, and consumer products. Interesting enough, over the weekend, the Wall Street Journal actually put out an article talking about if these consumer product names or staples, I should say, are still defensive. Is this a defensive trade in your mind? Are you worried about some type of volatility going into the new year, or do you actually see upside for consumer products and staples?
If you look at what's done well, it's really been high growth names. It's been risk assets also outside of the U.S. And so if you look at kind of, just where valuations are with some of these consumer names, as well as the potential for upside. And I think they've been impacted by kind of the negative theme around the K-shaped economy. And we think that some of these consumer businesses have strong franchises. And if there would be a pullback in the market, I think those stocks would do well as well on the downside.
Interesting. So if we look at Build-A-Bear, has seen a big pullback actually from the top here in September. Weird period to top, because all the rest usually topped October, end of October or so. Stock went down at 1.40%. Now it's down 28% from the top, but from the recent bottom, it's already recovered 19% or so. Very underrated stock, as you know, Build-A-Bear. This is what it has done over the past couple of years. Crazy stuff. If you were one of, let's say, if you were one of the lucky ones, you bought it at close to the bottom in 2020, you're up 2,358%. It's insane. Insane stuff. It fell on earnings. No, it fell after earnings. On earnings, it actually continued to go up, and then it topped here. After earnings, it topped. It fell on earnings, and then it fell on the recent earnings, and then it recovered. But the previous one, it went up. Have I seen the year-to-date performance on EU banks? No. Let's see. Deutsche Bank. I assume it's this one, or you want to watch the Deutsche Bank on the Euro? Okay. So, yeah, wow. Okay, so Deutsche Bank on the New York Stock Exchange is up 124% year to date. That's insane. Huh. UniCredit. Let's see. I guess, no, this doesn't make any sense. Although, probably not. No. Maybe BNP Paribas. Yeah, also, where is it? here. 34%, so also significant outperformance. ING. Yeah, let's look at this. Yeah, also same thing here. Okay, crazy. So it's interesting that that we're looking at this at the end of 2025. Up 78% ING. Can it continue? Again, I haven't followed this company, so I don't know if it can continue or not. I guess if their financials have gone up and to the right, and then I guess it makes sense, and it should be continuing. I think financials again are doing well across the board, even in the US, right? They're all talking about JP Morgan. It has also done well. If we look at the start of the year, of course, in the US, you have a bit more volatility, but it's still up 32, 33% or so. So, any thoughts on Aster? No thoughts. I've seen this ticker pop up quite a lot, but I have not really looked into the company. I know it has also done well from the start of the year, I think. It did peak here, but what is it? A pullback now. It pulled back almost 50%. But I've not looked into this name that much. Let's see. What else do we have? Thoughts on Oscar? I did make a video about Oscar yesterday, specifically talking about Oscar, UnitedHealth, short, long-term effects. They are still expecting 2026 to be a year where they return to profitability. So unless that changes, I'm still expecting a good year. There's still that gap that can be filled all the way through. It's now 50% filled, so we'll see. I'm still very bullish on it, of course. This is the question. Have I considered buying more PayPal options after this big drop? I will consider after the next earnings report. Now I feel I have already enough. Because if the next earnings report is again disappointing, then I'm getting double screwed. So no, right now no. But so yeah, I mean selling puts would be a good way to balance things out, I would say, for now. But buying more call options, no. Even if I were to buy 2028 ones, I rather keep the cash and wait for Q4 results and the guidance for 2026, because I know it's undervalued. I know it's cheap, but if management will keep on screwing me over every single time by saying, "Oh, all of this is going well," but then they focus 90% of their energy on a bad aspect, then yes, my options will get nowhere. So for now, no. Let's see if I have this here actually. Wait, first of all, we have what, a minute? Okay, so let's already do this. Let's do this. Tack. Let's do this now. Do we have? We do not. We have a gunshot sound. That's not what we want. We do not. But apparently I can upload my own ones. Maximum size is 30 megabytes. Okay, so maybe I should do this for tomorrow. I'll do this tomorrow. Selling puts locks up so much cash. Well, I can tell you that buying call options also locked up a lot of cash that that is coming down. That is coming down quite a lot, unfortunately. I know I'm laughing, but maybe I shouldn't be laughing right now. Should be crying. All right. Let's open this market up in a bit. and then we'll see if we can continue to laugh or we should go back to crying. All right, ladies and gents. Ding, 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 bing, bing, bong, big bong. The markets are open. It is December 22nd. It's a Monday. It's Christmas week. Hopefully we do get Santa coming and the Grinch gets scared away. I hope so. I hope so. So the markets are open, lads. Let us see what we have. We have greens across the board for now. For now. Wait, is it? Yes, it is. Whew. I was like, interesting. So iron is not up 6% like pre-market, but it's still up 3.5. So we're going to give it a couple of... You know what? You might have something there. The Grinch is green, Santa is red. Huh. Yep. So I guess we need more Grinch, less Santa. Okay. How the turntables have turned. Interesting. All right, let's have a look. Let's have a look at all the names right now. We have, let's start with big tech. Tesla is up 2.6, closing in on a new all-time high. Let's see if we can cross $500. Oracle is up 1.8, Meta is up 1%, Microsoft is up 0.5, Google is up 0.3, Netflix is flat. Amazon is doing its best to still suck, still up 0.3%, and Apple is flat at the moment. Chip names, we have Micron still leading here, up 3%. Marvell is up 2.8. Intel is at 2. AMD is up 1.6. Qualcomm 1.6. CLAC 1.5. Applied Material 1.3. TSM 1. Nvidia is up 1.2. Lam is up 0.8. ASML 0.4. And Broadcom is up 0.5%. Moving on to the neoclouds, we have Hut 8 up 5.4%. Iron up 4.8%. Did touch the 100-day moving average, so that might be a resistance, $42 or so. CoreWeave is up 3.7%. We are far away still from the moving averages. Nebis is up 3, Cypher 2.2, Applied Digital 2.1, Course is up 1.6, and White Fiber is up 0.4%. Moving on to FinTech. Webull is up almost 3% today. Cesar is up 2.4, Chime 1.8, Affirm 0.8. Wait, why is it this? I mean, they're all moving so quickly. Hood is up 0.5, dLocal is up 1.1, 4 is green for now, 1.1%, Pagaya is up 8%, MasterCard is up 0.7, same with Amex, same with New Holdings, Visa as well, same for SoFi, Block, same thing, and then PayPal is still green for now, but you know the drill. It's back above $60, it's up 0.4%, Klarna is up 0.1%, Dave is down a little bit, 0.2%, Adyen is down 1.7%. Then, as for the rest category, yep, I mean, Rocket Lab is really trying to go to the moon, up another 5.7% here. Crazy stuff. Then AST also following suit here a little bit, up 3.4%. Uber is up 2.3%. Reddit is up 2.6%. BMNR is up 1.8, 1.9. What is Ethereum doing right now? Up 1.2%. Okay. Oscar is up almost 8%. What else do we have here? Shop is up almost 8% here to $171. Zeta is back above $18. Rubrik is cannot go past that 200-day moving average for now, which sits at $79.40. Adobe is flat. Salesforce is up 0.4. HIMS is flat, literally flat. UnitedHealth is down 0.2. Novo Nordisk is down 0.5. And Duolingo is down 1.3 or 1.4% at the moment. And myself. I think we'll be the only ones. Yes. I still don't know. I don't just put it on the list here. Figma. Figma is up almost 1%, just under $40 right now. Is Meta the best value? It's definitely on a pricing wise, it's definitely, yes, the cheapest out there. It's also the one where, I mean, you can see, first of all, you can see the core business becoming more profitable thanks to AI, right? The whole advertising thing becomes better and better. Plus, the huge increase of content AI slop on Instagram just increases the watch time and the time that people spend on these apps. It's not great for their brain, but pretty good for the business. And then yes, you get your so-called call option on this whole AR, VR stuff for Meta and everything that they're trying to do AI-wise. So yeah, I would agree with you. Where is Melly? I forgot to touch on Melly. If Nu is here, Melly should not be far away, but it is. Melly is actually down again 1%, so we're back here under $2,000 for Melly. I mean, it has no bottom. It seems like it did bottom at around 1900, because every time it touched that, well, every time it touched that twice already, it did rebound. So I would assume that this 1900 mark could be the bottom for Melly. There's lots of profit taking. Would you, I guess again, and actually iron is up now 6.6%. There is lots of profit taking, but then again, why not? Especially after the crazy day we've had on Friday. Wouldn't be too crazy. Plus, what day is it? It's 22nd. So yeah, Wednesday is half a day. Christmas Eve is half a day. Then Thursday it's closed. So it's going to be a very, very slow, low volume week out, and even next week, because January 1st is also Thursday, which makes sense since 25th is Thursday. So that makes sense. So the next 2 weeks are going to be slow, but I would love to have these types of slow days where everything is just green. More of those. Por favor. Good call on visiting Japan and only 5 weeks until Tesla reports. I mean, yeah, a month from now, we are already going to have TSM, Netflix, ASML earnings. A month from now. And I think, and even Tesla, almost a month from now. Things are going to come at us pretty quickly. Any thoughts on Skywater? No, what is it? Skywater Technology. Let's see what they do. But yeah, I do think that visiting Japan, take advantage of the currency, the weak currency. Plus, you still have, I think I read it 2 days ago, up until November 26, where you get your tax refund. Like if you go to Uniqlo and you buy stuff, you already get your refund at checkout. You don't have to do it at the airport like every other country out there. But that's only that will change November 26, in case some of you wanted to go shop until you drop in Japan. Skywater provides semiconductor development and manufacturing services. Under $1 billion in market cap, expected to grow, although good question. Uno momento, por favor. So revenue is still expected to grow very fast, actually. Well, no, fast this year, faster next fiscal year, but then only 4% the year after that. No. Not my thing. Not mine. All right, we go back. Let's see what we have. And Rocket Lab is literally a rocket. All right, general question. What are your thoughts on your portfolio? Is there a max percentage that you would allow a certain single stock to own in your portfolio? I mean, SoFi is a big chunk of the portfolio. Of course, PayPal with the options is also a big chunk in the portfolio, but options is a completely different ball game. Do I have a problem with? No, not really. What is it? Was it SoFi specifically? What is it? Let's see. 15.2%. Do I have an issue with that? Not at all. Not at all. If it were like a random stock that suddenly is up significantly, started with a small percent of the portfolio, and then suddenly jumped to 20% of the portfolio, then yes, I would probably be I would be uncomfortable with that. But since it's SoFi and the second one is actually Alphabet at the 10-11% or so, I am not worried that much. If SoFi were 50% of the portfolio, again, I don't think it would ever be 50% because from where it is now to 50, I would have probably already trimmed a little bit. Plus, actually, you don't even have to trim. You can just allocate more funds to the other positions, and then they become bigger, and so SoFi becomes a little bit less. So yeah, I'm for now. No, I'm not that worried, and I don't think I have a max percentage in my mind. Definitely 50%, but I mean the number is probably going to have to be a bit lower than that. Maybe 25%, I guess. So it depends on the price of the stock. Because if, let's say, Google is 25%, but it's still at a 20 times PE, then I'll let it be at 25, and it's probably going to suddenly reach 40 when it has the re-rating, which is exactly what happened, but just hypotheticals. Do I have any stocks on F1? No, I don't have any stocks about F1. You can buy the... there is that Liberty Media, right? You can buy, but no. I only have stock in Max Verstappen. That's about it. When I start a new position, yeah, usually. Also, it depends on the company, because 5% is already quite something. So I can start with 2% and then work my way up. But I give the example of what has happened with the local, right? There was this question a while ago. I think in the period where the local was around $10, $11 or so. Why is it only 3 or 4% of the portfolio? I'm like, first of all, it's because the stock hasn't moved much. It has actually come down a little bit. And second of all, I've put the amount of money in it. I've positioned it accordingly so that when the stock starts to go up, which it did, you will see that the percent it takes in the portfolio also comes up. So that's the thing when you build up positions, especially with stocks that don't move on the upside, stay flat or move on the downside. It can seem as if nothing changes. It can seem like, oh, you don't really have that much conviction because it's only 5%. No, it's 5% now. Suddenly when the market figures out that, oh, it's actually too cheap, undervalued, and my thesis is correct, it will naturally become a bigger chunk of the portfolio. I don't need it to be already 10% of the portfolio and then for it to become 20% eventually. Again, depending on the companies, but I give the example of a dLocal, a Shift4, a Rubrik, things like that. I start small because I do think there is, again, it's undervalued, it's detached from reality for some of them. And then when it starts to react accordingly, you will see it become a bigger chunk of the overall portfolio. So look, for the March ones, I've made my peace with it. I lost those, okay? There's still some left, but there's no point in me like taking what's left and putting it in something else. The June ones, I still have some time. I still have over 6 months. It's 2 earnings reports and another 5 analyst conferences. I say this as if it is a positive thing. Hopefully it will be. Hopefully it will be. And then the rest, which is the majority, are 2027 January call options. And I still have a lot of time with those. Now, of course, if we were now, let's say, August of 26 and we're at $60, then yes, I would be very worried. But we are still in December 25. And so I still have a lot of time to see the price of the stock go up. And if I see that things don't change, then maybe I'll just push them further out to 2028 or something like that. But for now, no. The 27 I'm not worried about at the moment. The March ones screwed up. I mean, screwed up. It's not my fault that they cannot have a clear message, but okay. And yes, some of you, you should have sold a month and a half ago when the stock was higher and your options were all green. Yeah, okay, should have, but the stock should not have crashed since then. Since, well, was cheap then, it's cheaper today, but yeah, shoulda, coulda, woulda. Have a look at Grab. Let me guess, still $5, 5.2. Okay. But it's up today 5.6%. Why is that? It bought a Chinese robot startup. Okay. Interesting. Bets on F1 next season. Oof. That's I mean, it's a whole new car, new way of racing. I will still put my bet on Max Verstappen because he's the best driver out there, but we are probably going to see a lot of car issues in the first couple of races because it's a whole new thing. Which begs the question, what's the point of having Formula E if Formula 1 suddenly turns into Formula Electric? Your hope that Ferrari performed for once, well, it's like my hope of PayPal going up. It's there's no point. There's no point. Have I discussed the future of RAM and PC? I thought you were talking about the car. Yes, this is indeed a problem. This is indeed a problem. Do I still have? I might still have a spare one here. Maybe I'll be rich because of that. Yeah, it's again, there's more demand than supply, so good for companies, not good for us. That's what I have to say. I did also see a report that Nvidia GPUs, let's see, Nvidia GPU, that they're going to stop to produce some gaming GPUs. Let's see. Yeah, so there was that report that Nvidia is looking to cut gaming GPU production by up to 40% in 2026 due to VRAM supply issues. So people are already freaking out that this is going to, of course, increase the cost of GPUs like crazy next year. Well, hopefully AMD comes out with an actual good performing GPU to tackle the cost issue. I'm not into cricket now. Never really understood the cricket game. What's my plan with the Duolingo? Nothing. Just holding and seeing what happens over the next couple of quarters if their plan actually works out. But that's about it. That's again the beauty of just holding shares and not options, is that you don't care about the time. As I said, if I were to look at a new company to add to the portfolio, it will probably be Netflix, yes, because it provides this opportunity. But I would have to open a new position, which I don't really plan on doing anytime soon. I mean, Himsel Iron it's like, do you want a platform for weight loss, Viagra type of thing, hair loss, or iron? Bitcoin miner turned AI compute data center company. It's like two completely different companies. I of course own Iron. I have not watched the new video. I did watch the first video that he made at the start of the year. And the funny thing is that since then we haven't heard anything from PayPal, Honey, or anybody else. So my assumption is if there was something really serious, then we would have heard about it, and we would definitely not hear PayPal talk about the new developments on Honey, which, again, if the accusations are true, then I don't think they would want to expand on that product right now. Plus, again, we haven't heard anything from PayPal. Maybe there is a legal reason for it. I don't know. I would of course love to get more information, but I still have my Honey extension. I have 355 gold. Can't really do that much with it, to be honest. Yeah, price-wise, probably yes. Price-wise, probably, yeah. Which is why I own Uber. And why I bought more last week. I did see it. Pretty crazy, huh? Pretty crazy. Again, I think next year is the year of autonomous vehicles and robotics, or humanoid robots. Iron is up 8% today, yeah. So you guys told me it's probably because of Bitcoin. So let's see if Bitcoin is up even more. Not really. So I guess there's just continued momentum, because I mean, Hut 8 is up another 11% today. Hut 8 is up 11. Core Reef is up only 2%, 2.4. Nebius is up 5.4. Love it. I love to see my names be up so much today, which means I'm always scared to look on the F for Fintech. Okay, for now it's still up 0.7%. Whew. Shift 4, where is it? Shift 4 is up 1.8. It's one of those names. Even if analyst growth rates are coming down, it still is insanely cheap. It's also a lot of sentiment-driven things on that one. Yeah. Maybe. But that would be like a really broken business, because they use buy now, pay later from PayPal. Then Paramount would still have to raise money to pay the buy now, pay later. So it's the worst case scenario for a buy now, pay later business, is you buying things with money you don't have. So you have to go and ask money from someone else, pay an interest on that, pay a small interest on the buy now, pay later service. Terrible. No updates. No updates. Still on the watch list. Still on the watch list, and it stays on the watch list because again, I'm not in a hurry to open a new position. I'm also not in a hurry to sell a full position of the portfolio. What is Alibaba? Flat today. Flat today. What about Baidu? Down a little bit. Okay. And Oracle is back here under, only up 1.1%. So yeah, with Netflix, no. Unless I suddenly decide to cut the two that I mentioned were Micron and Alibaba. Both are still cheap. I mean, not expensive. Both I'm up significantly. But if I were to cut, it would be one of those two, maybe an Alibaba, because again, it's the Chinese overhang, blah, blah, blah. But for now, I am not planning on doing it. Do I believe? Wait, first of all, what do I think of the stock of alcohol? What stock? You mean like an AB InBev, like the beer? Or is there some other specific name? I mean, I had the opposite prediction. I thought first half would be better. Second half is when you see more turbulence because you're going to go exit 26 into 27, where the market will have those big questions and probably we're going to have quite a lot of answers already on the monetization part of this whole AI story. Do I think we can reach 7,700? It's possible. It's possible. This one. There were a lot of moves with this one, no, recently. Yeah, moves on the downside. What has AB InBev done actually? What is it? Let's see. Yeah, so this one has literally done nothing. Yeah, for 5 years. Nada. For 5 years, I've been stranded on a hellish island. Someone knows where this is from? Let me know in the chat. We'll see if you know where this line comes from. I don't think so. I don't think so, because it's been months already, right? It's been months already where he's not been the CEO of the company. So, I mean, how long can the market continue with the same excuse? Yeah, I think it's more about the organic growth and the return on investment with the whole Global Blue acquisition. Bingo. Very, very good. Very good. All in on Amazon. You were all in on Google before, correct? You were all in on Google, now all in on Amazon. Can't blame you. So this is the other famous line, but the other one that I was stranded on a hellish island is also a pure lie, because then throughout the seasons we find out that the guy didn't even spend a year on this hellish island. The guy was traveling around the world during those 5 years and never really thought about returning home. But yeah, okay, Oliver. The debt issue, again, I think the debt issue is overblown. I think the debt issue is very much overblown, especially if they continue to be profitable and they'll reach those $1 billion adjusted free cash flow exit rate of 2027. It is overblown, because the debt is for what was it, 2030, 2031 or something like that. So they still have a lot of time. But yeah, it has more to do with the profitability side of it after all of these all of the acquisitions. Let's see if I can find it. Let's see, because they did raise money, right? Not that long ago. Can't find it. Can't find it right now. But anyways, predictions. I mean, I won't be surprised if Shift 4 is close to $100 a year from now, because they'll have a couple of quarters of, I mean, post Global Blue acquisition. I think the market will already figure out that it is quite cheap. So I wouldn't be surprised, closer to 100, 12 months from now. I wouldn't be angry at all if that happens. All right, let's have a quick look. Meli is the one down 1.2, Novo 0.7, and United is flat, UnitedHealth. Same with Google. AMD was up more, and now it's only up 0.2%. There was some news that came out for AMD. Let me pull this one up. So, according to MLEX report, AMD's China-compliant MI308 AI accelerator is nearing rollout, and Alibaba is considering an order of roughly 40 to 50,000 chips. Apparently, that's not enough to pick AMD up a little bit. But okay, again, the guidance from AMD, from Nvidia, none of it includes China. So whatever comes, it's an extra bonus for us. So, looking at the list, we still have Rocket Lab up 8%, AST 6.8, Iron is up 7. I mean, all of the Neo Cloud stocks are doing quite well. Could we see a rug pull? No lo sé. Most of you think we are going to end the day green, so hopefully not. You know, we need the Grinch, because apparently the Grinch is green and Santa is red, so we don't want Santa, because Santa is red. Voilà, that's the reverse psychology that we have here. Let's see. My portfolio total, 35,000 euro divided in 25% SoFi, Uber 15, Nebius 25, so 50% is SoFi and Nebius. And then you have Uber 15, Archer 15, and the rest are smaller: Oracle, Lithium America, and okay. Should I change Archer to Nvidia? Archer is 15. I mean, Nvidia is, I guess, the safer bet here than an Archer. I like the conviction move there. SoFi Nebius is 50% of the portfolio. Not too shabby. Good divided. I mean, you don't have to ask other people what they think about your portfolio, since it is your portfolio, right? Some people will say your portfolio is trash, it's very risky, doesn't make any sense, blah, blah, blah. Don't listen. It's your portfolio. Are you happy with the composition of the portfolio? Do you feel comfortable owning those? Yes or no? It's up to you. I am, of course, biased because I own some of these names. As you know, I own SoFi, I own Uber, and I own Nebius. And then, yes, I own 4 shares of Nvidia, but it doesn't matter. So it's up to you. If you feel comfortable with it, stick with it. If not, then change it up a little bit. No harm, no foul. The Grinch rally. Yeah, I think we should go and run with that. The Grinch rally. Much better. Much better. The Grinch rally. Greens across the board. Okay. Ladies and gents, that will be it for me for today. We shall see each other tomorrow for another Grinch rally, hopefully. And then Wednesday, half a day. And then we can all have a very, very long weekend, I would say. So far, so good for the start of the week. Hopefully we can continue like this. Would I do a portfolio review? I mean, my own I did yesterday. If it's you guys' portfolio, I think we can do maybe a stream like that, maybe next week or so. Could be interesting. All right, lads, thank you all for joining. Have a great rest of your day. Don't look at your portfolio every couple of seconds. I'm sure it will be fine. See you all in the next one. Adios.